Hi, today we are going to discuss a topic that almost everyone is interested in, interest rates. Interest rates have been a key driver of the economy since the pandemic, along with the stimulus being pumped into the market. The Feds lowered the Fed funds rate, which ultimately lowered the interest rate, which allowed for cheap borrowing. Buyers can borrow at a super low interest rate, which ultimately pushed the housing prices higher, and affordability becomes more of an issue. However, over the last couple of weeks, we have seen some increased rates rise. We have seen the 30-year fixed rate go up anywhere between 0.3% to 0.5%, which is a substantial amount. For example, increasing your rate from 3.25 to 3.75, a mere 0.5%, could cost you almost $150 more per month on a $500,000 mortgage loan. Over the course of 30 years, that's over $50,000 more in payment. What does that do for the housing market? Does that create a housing market crash? Does it create stability? How does it affect general buyer or seller like you and me? In today's video, we're going to talk about why we have seen the rise in interest rates over the last couple of weeks, what we are likely to see moving forward towards the end of the year, and how it impacts the housing market right now. I have here with me this morning Kelly Nutt, our managing broker at the JLS Bothell office. Thank you for joining me this morning, Kelly.
Thanks for having me.
So before we go deeper into interest rate, can you perhaps share with us what you're seeing in the real market these days, in the recent months, September, October? Are we still seeing bidding wars, multiple offers on a listing, or are we starting to see a slowdown in the real estate market?
It's a great question. We get that question all the time, especially right now. It depends on where the home is, what the prices are. Yes, we are still seeing multiple offers. On majority of the homes that we list, we're still seeing that. There's a high activity of buyers because of the interest rate still being low. But with the news and the media telling us that rates are going to be going up, it does cause buyers to want to find something now before the rate goes up because of that cost difference a month. It might make or break someone for that home. It might push them to a different price point if the rate gets to a certain level. So now they might have to look for a home that's less expensive because the cost per month could be higher. Outskirt areas are still pretty strong. It depends on the price points. It seems that higher price points aren't as affected as much by the interest rate because of the income level of the buyer versus some of the lower price homes where it's more of a fixed monthly. You'll see it affect that some more.
And the Federal Reserve is expected to start tapering in November, which is now.
Yep.
Which means it plans to reduce the amount of stimulus it has been putting into the economy. How is this going to affect the interest rate? And how then is the interest rate going to affect the market?
Okay, so as the bond goes down, the rates go up. And that's what we're seeing because of the stimulus being pulled back. And we've already seen the rates tick up a little bit. I mean, not much, but it's coming. It's up about 1/8% or 1/8. What that does is as the bond goes down, the rates go up. That can affect kind of what we just talked about, the buyer's power. So, and what will that do to the market? If less buyers can afford a certain level, we might see a little bit of a change in the market. I don't want to say a slowdown, because as we have seen over the last couple of years what the pandemic has done and changed the landscape of our real estate market, our local economy is one of the strongest in the country. We have more and more people coming here, and all these people are going to need a place to live, whether they're renting or purchasing. Rents are going up, home values are still going up. Will we see a 25 or a 30% appreciation next year? It's hard to tell, but we still see that there will be a positive gain next year, maybe closer to 15, maybe 20%. But overall, the market is going to stay in the seller's favor because rates will have to take a significant jump before we see a big shift in the actual real estate market.
Now, on the other hand, do you think interest rate will ever go lower than it has been this year or last year? After all, interest rate has been on a going down on a downtrend since 1982.
Right.
And it has not break the trend yet.
No, it hasn't. I want to say no, but I don't have a crystal ball, and we thought it couldn't get any lower and it got lower. But honestly, I don't think we'll ever see rates in the next 10, 15 years in the low twos on a 15-year, or even, I actually know of a friend of mine was able to purchase a property for their primary residence, bought the rate down a little bit. They were at 1.75 on a 15-year. So will that happen again? Yeah, I don't think so. There's a lot of things that took place over the last few years that pushed it down. A pandemic, a global pandemic, the economy, rates were already coming down. So I'm gonna say no.
Okay, so I know you say you don't have a crystal ball.
Right.
But this is the $1 million question, and I have to ask it. Should I buy now or should I wait?
It has to be the right time for you, okay? Yes, there's a lot of factors that are pointing to, yes, overall, it is a good time to buy. But if you have to be ready, you have to have the means, the funds, you have to be in the right situation for your income or your job or where you're at. If you're looking to take a risk and if you have some uncertainty, this might not be the right time. I think it's also important to remind people that when we're purchasing, or when you are purchasing real estate, is it a long-term purchase or is it a short-term purchase? If it's a short-term purchase, you need to understand that if the market does go down over the next few years and you're looking to sell in 3 or 4 years, you might break even, you might lose money. If you're looking at real estate as a long-term investment, history has shown that real estate has always gone up over time, and it doubles after so many years. And so if it's a long-term and you are in the right position, yeah, it's a great time to buy.
Thank you, Kelly.
Thank you.
I'm so glad you can join me this morning. And if you or anyone you know is interested in home buying or selling, this is Angela Ting with JLS Bothell, and I would love to chat with you.